Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AFLAC INC quarterly report. AFLAC Incorporated offers a diverse range of insurance products and services to individuals and businesses across the globe. The company's product portfolio includes cancer insurance, medical insurance, nursing care insurance, whole life insurance, gift insurance, WAYS insurance, child endowment insurance, Tsumitasu insurance. In Japan, accident insurance, disability insurance, critical illness insurance, hospital indemnity insurance, dental insurance, vision insurance, life insurance. These products are sold through various channels, including individual and corporate agencies, banks, independent associates/career agents, and brokers. AFLAC Inc.'s stock price increase. Key factors over the past year. AFLAC Inc.'s stock price has experienced a modest increase of around 6.5%. Several key news events have contributed to this rise in stock value. One significant factor was the company's strong third-quarter earnings report for 2025, which showed net earnings of $1.6 billion and revenues of $4.7 billion. This positive financial performance boosted investor confidence and led to a surge in stock price. Additionally, AFLAC announced dividend increases in December 2024 and January 2025, signaling the company's commitment to returning value to shareholders. Dividend hikes are often viewed favorably by investors, which can positively impact stock performance. The benign growth outlook for AFLAC Incorporated has also underpinned its share price, providing a stable foundation for sustained stock value. These factors combined have contributed to the modest increase in AFLAC Inc.'s stock price over the past year. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by an increase in net earned premiums, adjusted net investment income, other income, and new annualized premium sales. Additionally, the sale of group products and contributions from certain product categories, such as accident, have also contributed to revenue growth. On the other hand, revenue decline can be attributed to a decrease in net earned premiums, adjusted net investment income, total benefits and claims, and contribution from critical care product category. The impact of mixed or neutral factors such as net investment gains/losses, unrealized holding gains/losses on equity securities, foreign currency gains/losses, interest rates, and concentration of business in Japan has been minimal. Net income and profit margins. A shift in trends. The financial summary reveals a mixed picture of net income and profit margins over the past year. Initially, net income decreased from $3,541 million in 2024 to $2,267 million in YTD 2025, indicating a decline of -6.5% for 9 months. However, this trend reversed in Q3 2025, with an increase from -$93 million to $1,639 million. Profit margins also experienced fluctuations. While certain segments, such as yen-denominated fixed maturity securities and US dollar-denominated equity securities, saw a decrease in profit margins, the overall pre-tax adjusted earnings margin increased from 16.7% in 2024 to 19.1% in 2025, excluding foreign currency remeasurement. The increase in pre-tax adjusted earnings margin can be attributed to lower benefit ratios, which contributed to higher profits. However, the decrease in net income and certain profit margins suggests that the company is still navigating challenges in its financial performance. The company's financial performance indicates a strong ability to generate cash from its operations. The 9 months ended September 30, 2025, saw an operating cash flow of $2,240 million, while the 3 and 9 months periods in 2025 collectively generated $10,487 million in operating cash flow. This significant amount of positive operating cash flow is a testament to the company's financial health and ability to sustain its operations without relying on external funding. The company's debt level and interest expenses have undergone significant changes. On one hand, the total debt level has decreased from $105,087 million to $98,858 million, indicating a reduction of $6.229 billion. However, notes payable and lease obligations increased from $7,498 million to $8,685 million, suggesting an increase in certain types of debt. Regarding interest expenses, there is conflicting information across different pages. While net interest expenses decreased by $53 in Q3 2025 and $169 in Q3 2024. Interest expense also increased by 41% in the 3 months ended September 30, 2025, and 33.6% in the 9 months ended September 30, 2025. Overall, it appears that interest expenses have been inconsistent, with both decreases and increases observed across different periods. AFLAC's financial performance overview. AFLAC's financial performance was mixed across its segments and regions. On a positive note, AFLAC Japan stood out as a strong performer, contributing significantly to consolidated earnings. In the U.S., AFLAC performed well in the third quarter of 2025. However, there were also areas of concern. Despite a strong third quarter, AFLAC U.S. experienced a decline in performance compared to the same period in 2024 for the first 9 months of 2025. This indicates that while some segments are thriving, others require attention and improvement. AFLAC's company outlook and strategy, focusing on diversification, risk management, and digital growth. AFLAC's company outlook and strategy are centered around maintaining a diversified portfolio of assets, managing risk through derivatives and other means, and growing the business through digital applications and new markets. The company aims to achieve long-term risk-adjusted returns and stable income while prioritizing prudent liquidity and capital management. Key aspects of AFLAC's strategy include maintaining a diversified portfolio of yen-denominated and U.S. dollar-denominated assets, managing risk through derivative contracts, loan reviews, and foreign exchange collars, focusing on digital growth through applications designed to improve customer experience and develop new markets overall. AFLAC's strategy is focused on ensuring the company's financial stability while driving long-term shareholder value. The company has made several significant acquisitions and divestitures over a period of time. In terms of acquisitions, the company has invested in various unit trust structures, including CMLS, MMLS, TREs, other loans, and limited partnerships. Additionally, it has made equity investments in limited partnerships that have been determined to be variable interest entities, VIEs. The company has also acquired a non-participating single premium group annuity contract from an external insurer for $55 million in January 2025. Furthermore, it has acquired foreclosed properties with an amortized cost of $257 million and $407 million as of September 30, 2025 and 2024 respectively. On the other hand, there have been no divestitures mentioned in the report. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In the past 2 years, it has paid out significant amounts in dividends, totaling $1.726 billion from 2024 to 2025. Additionally, the company has also been actively buying back shares, with treasury stock purchases amounting to $4.779 billion over the same period. That concludes the financial summary for AFLAC INC. Feel free to comment below, and I will be happy to answer them when possible.